Greetings. Hope everybody had a great night of sleep. I know I most certainly got me some good Z's and snoozes in. So let's jump right in. We got some market movers already in the pre-market. McDonald's made some moves. Lilly. There's a couple others. Tesla is on that list as well for movers. So if we get a chance, we'll swing by and look at those charts. For right now, the Dow futures is down 0.40%, S&P futures down 0.33%, and NASDAQ futures down 0.38%. The stock futures flat as investors look ahead to Fed decision, mega cap earnings. For Europe, last reported mostly down. Their Eurozone inflation holds steady, but their GDP, gross domestic product, beats expectations, which means that they exported more than they imported, which is normally good for their economy, any economy for that matter. DAX down 0.59%, FTSE up 0.36%, the only one up. CAC down 0.49%, FTSE Milano down 1.01%, down the most in Stock 600, down 0.39%. For Asia, their market's actually all up except for one, really. But they're also tracking Wall Street gains. The China factory activity data slows, which should be interesting. ASX 200, which is Australia, up 0.35%. Nikkei up 1.24%. The Kospi up 0.17%. And HSI Hong Kong up 0.09%. Again, with Shanghai being the only one down, 0.26%. For the United States, last reported we have for Russell 2K up 0.70%. The VIX currently is up 15.03, which is they're up to 15.03, which is an increase of 2.45%. So that's a little bit higher, which speaks to a little bit of volatility, if you will. Coca-Cola tops earnings estimates, hikes revenue outlook on higher prices. In other words, they're expecting to make some more money because they're increasing the prices. Eli Lilly, they beat their quarterly profit. So they're increasing their guidance, meaning what they expect to make on a couple of their products are factoring in Zepbound and Mounjaro. So if you follow Eli Lilly, that's definitely a chart you may be interested in taking a peek at. All right. For Forex Factory, we got the employment cost index quarter over quarter. That's the red folder for this morning. 9 o'clock, orange folder, S&P CS composite 20-year HPI year over year. And the HPI month over month was a yellow folder also at 9 o'clock. Chicago PMI today at orange folder at 9:45. At 10 o'clock, we have the CB, consumer confidence, and that is a red folder. So we do have one more red folder. Market is open, rolling through there. One more red folder for us. So what I'm going to do real quick is go over to Forex Factory, and we'll take a look and see what these numbers looked like in more real time. So the employment cost index quarter over quarter was better than forecast, which is good for the economy. Then that was the red folder. The orange folder, S&P CS composite 20-year HPI year over year, was also good for the economy. It was better than forecast. And then the HPI month over month, also good. So so far, the two main folders here came out good in terms of the report. Of course, that does not mean that something is going to happen in our favor or in favor of the market, but at the very least, for the morning information, we got some positivity from that standpoint. For investing.com, same type of deal. Starting this morning, we had the 1 star. This is employment benefits quarter over quarter for quarter 1. And then that's 1 star, a 2 star employment cost index quarter over quarter for quarter 1. Then the run of 1 stars starting at 8:30 and going to 9 o'clock, which is the employment wages quarter over quarter for quarter 1, red book year over year. We got the house price index month over month for February and the year over year for February, as well as the house price index for February. Okay. Also, this is what the same as the other one, S&P, CSI, HPI composite, 20 SA month over month for February, which was 1 star. Then we got a 2 star. There's two stars actually for 9 o'clock. And that's the same CS composite month over month for February. So usually when you see NSA right here, that's usually meaning that it didn't include something. So that's NSA means, and it could be some of anything. You can dig into it and find out, but usually that means not including some type of thing. But this is month over month, and then this one is year over year. So housing price index, these two are probably connected more than likely, with just one factor missing between the two, or I shouldn't even say missing, but not included. But those are 2 stars. That's 9 o'clock hour. Chicago PMI over here is 3 stars at 9:45. 10 o'clock, CB consumer confidence for April, 3 stars. Then we have the 10:30, the Dallas Fed Services revenues for April, 1 star. And the Texas service sector outlook, 1 star. And then 4:30, when we're pretty much done, these 2 stars, API weekly crude oil stock. So we got on Forex Factory, we can kind of end the run of red, orange folders a little bit early, earlier. I'll say I always look at noon as the main gauge. Like, how are we close to noon? So it seems like only, and actually I said the wrong. This will be 4:30. So 4:30 is the last thing that's here. So we got a little bit sprinkled throughout the morning. So we definitely want to keep track of that and keep an eye on it. So good morning, Tamar, Johnny, Janae, good morning. Lisa Henry, good morning. So we will cut these two. We'll go through just the Tuesday and Wednesday. So before open today was PayPal, Lilly, who we mentioned a second ago, 3M, McDonald's, or as my dad would pronounce it, McDonald. No S, I have no idea why. We going to McDonald. Coca-Cola also reported Enterprise Products Partners, Melco Sirius XM, Chemical, and the original Oatly. After close today, we got Amazon, AMD, Supermicro, Starbucks, Riot, Pinterest, Caesars Entertainment, Root, Lemonade, and 1K. This will be interesting. Pfizer, tomorrow before the open, Pfizer, CVS Health, Barrick, MasterCard, Norwegian, Wingstop, Kraft Heinz, Estee Lauder, Marriott, and Aries. This will be interesting mainly because, if I'm not mistaken, Eli Lilly and Pfizer are in the same space. Not necessarily the same product, I'm saying, in the same healthcare type space. So this should be interesting. Also, if you're not aware, Walmart has been closing some locations that have had pharmacy. They're closing some of their pharmacy locations. So even though Walmart and CVS are not exactly in the same space in terms of health, Walmart would be more so in consumer discretionary or consumer staples. They still have those products that may, blend into some of the other sectors. And I know that Walmart is definitely shutting down not just buildings, locations, but they were doing the telehealth thing for a second. Having services, medical services at Walmart. So apparently that's being shut down. So it'll be interesting, not just this week, but in the long run, to see how that impacts these two. For our Mancini numbers, we have on Friday the plan. What's actually what? Is that right? Okay. The plan in SPX was simple. Bulls retain control as long as 50.77 held. 51.14 was target. 50.77 held, and we hit 51.14 basing here since. Give me 1 second. Let me look at my that's the wrong one. I knew those numbers was looking too familiar. Give me 1 second. And Mancini PNG. There you go. My file had not updated. There you are. Yesterday was slow as SPX consolidates last week's 130-point rally. Finally, at 3 p.m., we got a setup, putting in a textbook failed breakdown, long trigger under 50.96, then running to 51.19 target. Plan today, 50.90, down to 50.19 chop. That's like 80-something points. 51.05 is the mid pivot. Don't overtrade. It sets up 51.29, 51.45. Sell if under 50.90. So we're going to put 50.90. We can really do 51.05 for the main number for Mancini. And this was yesterday's. This was happened on yesterday. When it opened, did a little bit of a gap up, shot up to here. What is that? 51.23. It never actually made it back up there. It kind of did this channel. So if you were trading the breakout on yesterday, and this is on the 15-minute chart, you really didn't get a chance to really do anything for the majority of the day. It didn't even really break out until here. And even then it, came back in. So obviously if you timed it, quote unquote, timed it right, something might have worked out for you. But we're going to do, I think I really want to do 51.05 for the mid pivot, since that's the one that he mentioned. Yeah, we'll put that in there. I'm just using the terminology that he uses. I'm not pretending like I know what mid pivot means in his world, but in my world, I usually refer to it as a linchpin. But this was a gap up. I'm sorry, opposite way. This was a gap down. This gapped it down. Right here, we'll put the roll right here. This morning, which I don't know if anybody else follows the ES overnight, but I do. ES closed at 51.47. I checked it at 6:43 p.m. yesterday. It was down to 51.44. And then later last night, around 11:41, these are all Eastern times, it was at 51.43. Then this morning at 9:13, it was at 51.29. So it dropped 16 points since it closed yesterday. And so for it to start down, I was not surprised at that was the move. How long it will stay down, of course, that remains to be seen. And then for those trading the breakout, actually, it's probably smarter to just do it like this. At least we got the bottom of the breakout for right now. And then we'll go gallivanting about through the charts and see what happens. So good morning. I think I'm seeing Nori Standard. It's all right. Lisa Henry. Hello, Lady T. Good morning. All right. Anybody has any tickers? Please do drop those. And see what else we got going on over here. All right. Not this Saturday, but next Saturday, Cash Flow 101, our Cash Flow Chronicles. If you're familiar with Rich Dad, Poor Dad, and or Robert Kiyosaki, and or Cash Flow board game, we play online on the second Saturdays. The board game was created by Robert Kiyosaki in conjunction with the Rich Dad Poor Dad book. It is a fun time where we learn about multiple streams of income, budgeting, credit, stocks, real estate. It's a financial education tool. It is available. The actual board game is available for purchase. I bought mine on eBay years ago. There are cash flow clubs all over the world. I learned how to play in an actual cash flow club, and I do own the board game. If you want to start the conversation of wealth building, even stocks, with your family, this is a great way to get started, and that's really the goal. It's open to everybody. You can create a profile for free on richdad.com, and that's how you can get on the board to be able to play the day of. So obviously you can go online and Google it and YouTube it and watch how the board game is set up and all that other stuff. But this is a great opportunity for traders to for us to be able to expand our minds on the money that we're trying to make here and see how we can continue to cash flow off the money that we make. So that is the idea behind cash flow. Again, open to everybody 11 a.m. on Saturday, the second Saturday, and this graphic has the meeting ID. So you can always come back to this graphic and all the information is right there. All right. Love to have you, and it's always a fun time. Okay. So that is happening. Let us swing over to this right here. We look at earnings whispers for the anticipated release, but they even tell you these are the most anticipated earnings releases. So I don't know if you can still see the this link, but this link is to the Yahoo calendar, earnings calendar. I'm putting this in the box right now. So if you are so interested in seeing a fuller, more complete list of who's having earnings, this is where I usually go. And right at the top, it lets you know how many people had earnings on that day. As you can see, these numbers are way bigger than what earnings whispers is going to be able to fit on a graphic or a few graphics. So, but this is pretty much everybody, quote unquote, that you want to see. So many times when we're looking at, let's say the earnings whispers versions, we see the heavy hitters, but we don't always know about the other competitors in those same spaces that might not be considered heavy hitters, but still have an impact on that space. So this is a good way to take a look at those. Right. So that link is posted as of right now. So let's go. And PBR is Petrobras, if I'm not mistaken. Oh no, I was wrong. Petrolio. What is Petrobras? Petrobras. Oh, all right. PBR. So see what's going on with them. All right. Okay. Man, this looks better than some of the other oil charts that we've seen recently. We're looking at this. This has been a nice little uptrend overall. So this is great. They were down there down here in 2016, and now they're up here. All right. There's a very nice and this is not even all-time highs that they're at, but they're getting close to it, or at the very least the high in the past 10 years. Oh, it is Petrobras. It says right there. I was about to say, I thought that was PPR. Petrobras is what I know it as right here. They were at one point, they may be a dividend paying stock. That I'm not sure if they still are, but so this is a nice strong. That's not investment advice, by the way. I'm just stating a fact. This is a nice strong monthly chart that they have. This is a zone that they're currently in, is the seller zone right here. Leg in, base, leg out. The way things are going with oil in general, wouldn't surprise me if it did break up through there. But in terms of a trend, you got your lows here, and then you got higher lows and higher highs. So even on the monthly, it has been trending upward, but it did hit this resistance line. So we'll see how it trends in the future. But as of right now, it's in the seller zone, trending up on the monthly. So that is pretty good. Same thing for the weekly, still confirming it. You still have this up here for the seller zone. Got a buyer zone right here on the weekly. Right about there, 14. I'm gonna have to. The only thing I don't know is about them is what their volume is like. But switch that to the daily. So right here, you can see this has been where price turned around previously. That line has been support and resistance. So I'm not surprised to see this right here where it stopped on the daily chart. So obviously today it's doing this thing today. If we're doing a standard, let's say, charting formation, I actually kind of like the weekly one a little bit better, but we'll do this one. See what it's looking like for the buyers. See what we got. Just got a little bit more distance to try to catch up there. And here it looks like something is happening. I guess we could put that as a chair formation that it is in. Even if we don't agree that that's a chair formation, we can definitely agree that something is going on with that price, because it has turned around here before and it was respected by these lines here. So it broke through and is basing in that area. So I would mark it as such. I will go right here. So this would be a leg in. There's a couple different ways to look at this. Leg in, two in the base, leg out. Not the best leg out, so I'm not all that happy about it. But these two, this one right here would definitely be a revisit. I'm sorry, This one right here would definitely not be a revisit, but if it crosses again, then that would be like the first revisit. So, but these dotted lines I'm putting here just to signify that it is in this zone. Also, I know that there are some people who would chart it this way and use this as the leg in, base, leg out, and it will look something like this. So leg in, base, leg out. Let me open it up, sorry. No matter how you decide to chart it, I think the important thing is to understand that it is in a zone. Currently, it is in some form of area where you can see buyers and the sellers are having their boxing match. That's the most important thing. So I'm just as fine with this as the other one. I probably like this one just a tad bit more because it has a little bit more of a traditional look to it. But I would consider this to be in a buyer zone as of right now. And I would be looking down here to see what's going down. And I'll probably have this somewhere about here. And duplicate this. I would say leg in, two on the base, leg out. And so we have a couple different things in there to play with, but and again, this line right here, I'm gonna bring this down. I'm gonna copy this line. I'm gonna make this one gray. And the reason why is because even if we use this formation and say leg in, base, leg out, which some people will, and that's fine. The fact that there are buyers right here bouncing off this area, I still want to be able to acknowledge that on the chart when I come back and look at the chart. So I just put that line in there to say that that is an area that I want to pay attention to. So in terms of getting into a trade right now, I mean, some people probably are gonna do the call credit spread up here, or put credit spread down here, I would imagine. So let's take a look at that and see. I thought they didn't. I don't remember them doing weekly, but well, this is great. Oh, this is great. This is great from the perspective of when I last looked at it's been a while since I looked at these charts for the purposes of trading, but I don't remember them having weekly like these before. I thought they were monthly. So that's good that they at least have that. Maybe I just didn't see it, but the question is going to be whether or not the premiums are decent. That's going to be the other side, which may have been more of the issue before too. I'm seeing for this week, so we will be looking at, this is 82% out the money, right? 0.40 is your implied volatility. So if you did 1701 minus or plus 0.40, looking at 1661, you would need to be under that. So that's where we are. And I don't expect there to be anything here. They didn't even put no price in here. Okay, 3 cents. So that's equivalent of no price. But if we go to the top, right here, probably gonna be the same story. 3 cents. Pretty sure we don't want that. Let's go to the next week. And I don't know if somebody had a particular price in mind or strike in mind. So I'm just looking at the ones that I see, but I got a feeling this would be a situation where well, you would have to get, I would have to get uncomfortably close. 16.3. Yeah, you would be, if you're doing the standard, take the current price and subtract it, you're still at 16.2, and you would need to be under 16.2, and that would be here in the 84% range. Unless you want to, get a little bit closer. Make sure you're using that Arid Extra Dry though, player. This is 7 cents. And then this up here is probably not gonna work it. So yeah, it's 4 cents. I think between them being monthly at the time and premiums being low, I remember that's why I didn't pursue them. So I'm just seeing low premiums on all of these numbers. Even if you get to above 70%, you're still looking at and how I'm judging low premium is because these are credit spreads, right? And so if I were to say my tolerance would be, let's say 83% out the money, 0.8% on the sell leg and 0.9% on the buy leg is so small that there's not going to be a lot of premiums there. So that's how I can tell what the premiums, I may not know what the premiums are, but I can tell whether or not they'll be small. Same deal over here. This is 81% out the money, but 0.08 and 0.10, that's not going to be a whole lot. So this is about what it'll cost to do the trade, depending on what the fees are. So that's how I'm judging that. So I'll say if I'm looking at this particular one and I have had it before, but again, for dividends, not for trading for income, me seeing this, I probably will look at go back and take a look at them again and see what's going on, because they had a big drop off. But in terms of how we trade, I don't see enough premiums there for that. But it would be interesting to watch these levels. With this being $17 though, one thing could look at, if you got the coin for it, I don't see the premiums wouldn't even be good for this for like a cash secure put, right? Even if you're doing a cash secure put, the premium used to only be $5, but 16.5 times 100, I'm good. So let's move on. But I definitely think, like I said, I'll go back and check for buy and hold though. Let me see. We're gonna switch over here. I'm reading the comments for questions. So XSP and SPX are both based on S&P 500. So I'm gonna try to answer both of Johnny's questions together. In terms of the best time to get in, usually, well, again, not investment advice, but from what I have been told, if we're specifically talking about SPX or S&P 500, I do know that a lot of people get in the morning time frame. Depending on what they're doing, again, that hinges on, that's really the main factor, is what depending on what you're trying to accomplish. Some people will try to get in the morning push. Some people will follow, like I was saying earlier, the ES. And since the S&P, essentially the ES is, if you want to think of it, the way I memorized it was the ES /ES is the futures, which is like 24 hours a day, whereas SPX might be our version or our cut of that time frame. Let's say for New York, which why we need to make that adjustment. That's how I memorized it. I'm not saying that's how it is, but that's how I memorized it. And so when it comes to dealing with the SPS, I still look at the ES. So in my mind, since I knew that it was down, ES was down 16 points last night, I was expecting that it would close, that it would open, and at some point probably drop, just to go get those orders or what have you. So there are some people who follow the ES and do it that way, look at pre-market numbers and decide on if they want to get in. So they may be in earlier in certain products with the SPX. For example, SPY. You can trade SPY before the market open. So some people will be in SPY, which they all look the same. They'll take the same information. They might get in SPY. All these charts don't look identical, but they look very similar because they're based on the same products. But somebody might get in, let's say SPY in the pre-market, and utilize that information, that overnight information. They might get in and sell, do a sell on some shares and do it that way. So it really just depends on what you're trying to accomplish in terms of when you're trying to get in. But standard, the way I'm looking at it is, since I personally don't no longer trade SPX. So let me preface it by saying that when I was trading SPX, what I would be doing is we'll be trading the breakout. And so again, that goes back to getting in the morning. And so I'll be looking at, so this is SPY, but I can do SPX, XSP. Let me do it on a cash settle because it needs to be on a cash settle for the way I was doing it. So if I'm trading the breakout, for example, with just the first 15 minutes and waiting, I'm usually looking to see when it breaks out. Sometimes that could be right away. Sometimes it could be, I'm usually watching to get in. I start investigating the numbers at about 10, 15-ish normally, just to see what it may be doing. But I'm usually 10:45, 11 o'clock-ish, somewhere in there. That's when I'm thinking I'm probably going to get in. So that's how I'm looking at it in the morning. But it's all hinging for me on when it broke out, if it broke out. And if it didn't break out, then I leave it alone. Because I specifically trade the breakout because I'm using what is known as a PDT hack. And I only use the PDT hack with SPX. PDT hack Arlissa has a video about that in the YouTube archives. But so in terms of the morning, I'll look at it that some people get in the afternoon. They'll get in after maybe like the 2:30, 3 o'clock time frame, and go that route with it. And so again, it just depends on how long you want to hold it, which way you want to go with it. Obviously, there's strategies where people will get in for like the whole week, get in on a Monday or Tuesday with the intent to close on Friday, and play it that way. But even still, it's good to at least watch and see what's happening before you get in. And of course, we're regularly checking the VIX and seeing if it's going up or if it's going down. So if it's consistently creeping up, generally we're expecting these to be going down and vice versa. If this is going down, we're expecting these to go up because this is more like considered a fear factor gauge. So the more fear, the more selling. The less fear, the more buying. And so that's just very generalized view of it, but that's my overall perception of how that plays out. So I'm just trying to be safe. They said I used to date Tesla, now it's Nvidia, but SPX is my main squeeze. That's funny. That's funny. So right now, in terms of the breakout, I'll be watching this to see what it's going to do. Because our information is mixed a little bit. But what I will be looking at is what's happening on the 4-hour chart. And on the 4-hour chart, this is still downtrending. It broke past this when it was actually gapped up and stayed up above this last high. So we'll be trying to get up here on the 4-hour chart, and there's a gap up here on this 4-hour chart anyway. So once it gets to a certain point, I mean, it's still going to be hitting the gap. I can't say that I've seen any news that would make me feel like there would be a sudden spike for the whole S&P 500. But we do have earnings packed this week. This is a gap here that it's on this still the 4-hour chart, but this is also a gap here that price is sitting above, right? So you got this one that gapped up, and then you also got this gap up here if it's trying to fight through that on a 4-hour chart. So I will be personally watching to see what happens with all of this. And the line that it's standing on right now is a line from the daily chart, which is probably what's going on here? Oh, this S. Keep forgetting this XSP. So what we will do here is we were talking about this, I believe it was yesterday. It closed here at the top and opened here. So in other words, putting the lines in better spaces for when it opened and closes. So we've had some change since the last time we charted this. So let me rearrange these lines. All right, there you go. And we'll do this here. Put the gap up. All right. However, we go right here. This is the one I was looking at. Just looking at the lines to see where these lines should have been. And actually, they were all in the right area. But what I forgot was that I moved those lines a second ago, but I forgot there was a small gap right here. And this is, again, this chart is the XPS chart. So I was right to have those lines there. I hadn't. looked at the XPS chart in a while. So this leg right here is still forming. So that's why I'm not, this has a seller's zone feel to it, but since the leg is still forming, I like to wait until it's completed before making any moves on it, because it can go in any direction. But leg in, base, leg out is what I'm seeing here. I guess this might be considered a chair, depending on who's charting it. Leg in, base, leg out. That could be one there too. But these lines encompass that anyway. This line here and this line here automatically put it in the chair. So that is, but this is daily and it is on the uptrend. So there you go. May 1st. So we're assuming 0 DT. Wait, tomorrow? That's tomorrow, okay. So 1 DTE. If you're going above, I would say 515-ish. This is a one spread. It's $100 of collateral. For those who are in the frogginess, we got 20 cents, right? On $100, I'll be 20% on there. Put that in there. Then if you did it on the bottom as well, and I'm again 510 minus 4.7. I need to be below 505.54, which puts me right here. And I'm actually okay with that one. 81% out of the money, I'm usually okay with. 17 cents on that side. All right. So that's what I'll be looking at, Johnny. Sorry for such a long explanation. But that's how I'll be looking at XSP for right now. And I will be watching these two since it's earnings. I'll be watching these numbers and, preparing to close if need be once the trade has started moving a little bit. And I'll be keeping it moving that way. Thanks. And why wouldn't you get into it today? Actually, I got into it tomorrow because that's what was available. For XSP, they didn't have one for today. So SPX would have one for today, I would imagine, but XSP didn't. And I believe SPY should also be having one for today. Let's see. Nope. One for. Now, I don't know if this is just a function of the SIM for Thinkorswim that they don't have 0 DTE or let's see. Is there a setting on my side? Yeah, I got it set to regular and weeklies. So I'm not sure why the 0 DTE wouldn't be showing up for those two. Might be something we might need to ask or something, but I'm used to seeing it for SPX anyway, but we'll see what pops up. And I have to check. I'll check later. I'll check the other brokerages to see if I see the same thing. So yeah, so SPX does have the 0 DTE version. But again, I wouldn't get in. I personally wouldn't get in even as SPX yet until I see what's going on with the breakout. Then I'll take a look at that. Which so let's see. All right. So far, no movement on the breakout. What we have so far, gap down and pushed up to about right here as the highest so far. These two orange colors, this is the marked as the gap. I'm sorry, marked as the breakout. So that's what we're waiting to see what will happen with that. So yeah, if I'm getting in same day with SPX, then I will be doing the PDT hack with it. Anything else? I know we're gonna swing by a couple other charts and then bounce out of here. So this is my posse right here. He's Russell 2000. This is who I broke up with SPX for, Janae. This will be considered my main squeeze, I think. So this is the gap. So I've marked the 15-minute for the breakout, where it looks like it's trying to push out right now. Then this is the gap where it gapped down today. Something like that. So it looks like it's trying to push up. Again, I usually start investigating that. The breakout, Johnny, the breakout, really, I can't say that there's an end to it, but I'll say I am looking, I guess the end of it will be the end of the day. So for example, yesterday was SPX, but Russell probably, no, it didn't do it with Russell. Russell actually had a breakout. SPX didn't really have a breakout yesterday till later in the day. So if you were trading it at that point, it would just depends on what the momentum was and things of that nature. So sometimes a breakout can happen in the morning, the first 15 minutes. Sometimes it'll take a while. 11 o'clock, 11:30. I think I've even gotten in on the breakout at like noon, the noon time frame. So it really just depends on what the price decides to do and when. But I just literally just gauge it by when I see the price make its move. So in this case, although it's broken through, I don't want to I want to wait till it goes a little bit further. You know what I'm saying? So once it goes a little bit further and I see it's either actually coming out strong, or it came out, then it retested here somewhere, it kept going, then I'll be more comfortable with getting in with it. So that's how I judge that. All right. But that's Russell for right now. Makia Simmons, good morning. He said, why do you like Russ so much? That's funny. I like the way it moves a little bit better. There's some things that I see with Russell. It's not as volatile as SPX. So that's another thing. The ATR might be similar, but it's just not as crazy as SPX. It doesn't move as suddenly. I got tired with SPX. If I was doing the 0 DTE, the trade would be good all the way up till 359.59. Then as the bell ringing, that's when it's crossing and breaching. I feel like Russell seems to not, be that wild. It has its quirks because it is small cap stocks, but it's not as wild, and it is also cash settled. So that's why I like it. And then IWM is to Russell what SPY is to SPX. So this is basically the SPY version of Russell. And so because I can trade it as well with that lower price point, I still have that option to do just like people do when they're doing SPX and SPY. So it still gives me that same type of leeway. I believe I could, if I'm not mistaken, you can still short the shares before market open, just like you can with SPY, if I'm not mistaken. But even if I can't, which I usually don't do that kind of stuff, I still have, the flexibility of a higher ATR, but I also can, use IWM when I choose. So Russell also has, at least they used to. I don't know what's going on with Thinkorswim for the 0 DTE stuff. But what I'm seeing right now is the sellers. This was a seller's gap because this gap down, and I see that the sellers are putting their foot down and pretty much saying, get the hints. So before we bounce out of here, let's take a look at Lily, who was one of the market movers today. And I know that has been a stock that some of us have been trading in a couple of the communities that I am in. I want to put this under here. So there's no doubt that this has been on a run up. And it is basing right here. And what's the most significant about this is, as far as I'm concerned, is that we got a very strong demand zone right there. And as a matter of fact, this should be a different color. So for us, that would be considered a buyer's formation. Us being those who recognize that terminology. For the other of us, that would be demand zone. For other of us, that would be where the buyers are. So this right here, if we were just using it as a swing point, I'll probably put it somewhere in here. It's two things touching that. So this is where it has turned around. But if we were charting it the different way, leg in, base, leg out, and that is a strong leg out. And this again is on the weekly. And this particular formation, I believe, it might be the bullish flag. That's what this looks like. Whereas this thing will continue up. But the way it's pushing right now, you have a buyer zone this close to this. This is the weekly. I'm sorry, this is the monthly price up there. And you have the buyer zone right here, kind of pushing it. That's wouldn't surprise me if that does end up popping out, going up, coming soon. But that is a very nice, strong buyer zone formation on the weekly chart. Here's the gap up from today. I'm just going to pull this in. All right. So that got some serious distance. Eli got up there with looks like a Jordan dunk. Okay. So that's what we have here. This was the close. Gap up, buyer's gap, which means this may be getting retested for a while, right? This is on the daily. This is 767. This is 737. A 30-point jump right there. I don't expect that to just break through there on a whim. It'll take some work, but I would definitely consider this a cheer that it created. Leg in, base, leg out with the gap up right there. So there's our buyer zone, and we got another one right here. Leg in, base, leg out. It's right on top of that one. So these are directly intertwined, if you will. Then up here, put that there. Grab this one. We have one revisit. This made the second revisit here. This one is what I will say is the second revisit. Actually, third. 1, 2, 3. So I don't know, man. Based on what I'm seeing so far, I don't I don't know if that's the third revisit. And this is the buyer's gap right here. You know, I'm trying to understand why this wouldn't be breaking up and popping out of here pretty soon. We all know it could go a different way, but that's the way that's looking. Good morning, Drew. All right. Is it March 7th, 1978? If that is, belated happy birthday. So that's what we're looking at for Lily. And who else was on, actually? If I was doing Lily, trying to get into Lily right now, I probably would not be trying to do a call credit spread yet. We have to be real careful about that because we don't know if this is going to pop out or not and go right through, go smashing through that call credit spread. But I definitely will feel more comfortable doing a put credit spread. And thus, I would approach that. Probably going to land in the 765 area. We'll see. 789.51 minus 24.49. 765.02. All right. That's 80% out the money at 765. If you want to go there. 43 cents ish. In that range. I'm all right with that. 41 cents. And this is a 2.5 spread, by the way. So that's pretty good turn. Somebody on our last call, I think it was our last call. I closed my ELF. I think it was yesterday's call we did ELF. So I had put in order to close ELF, so I made a profit on that. Must have closed this morning. Yeah, bought this back for 10 cents, and I want to say to get in might have been 35, something like that. So that came up pretty good. Hey, Lakia. So let me help you out. So the question is, I only know buy and sell zone. Do I need to learn support and resistance for this group? It means the same thing. Trying to think of what chart I can pull up to give you an example. We'll do IW. We'll do IW. Actually, no, let's do something McDonald's is one of the movers, so we'll use them as an example. This chart I'm going to show you, this is terrible because there's not enough movement in there. Okay, we'll use this one. This is the weekly chart. This is McDonald's. Okay, so when we say buy and sell zone, let me give you an example of how those terms are sometimes interchangeable, but they work together. Okay, so here's the most important part. We're going to follow price action as an example. Okay, so if we look at where price turned around down here, so if you're going from current price and you're looking to the left and you're looking just for the areas where price has turned around, all I'm talking about is just where price has turned around so far. If I mark those areas where price has turned around, some people refer to those as swing points. Regardless of the terminology being used, we'll frame it as price turned around. All right, price turned around. So I'm just kind of marking where I see price turned around, and I'm trying to get as many wicks to touch that line as possible. Wicks or candles, but as many touches as possible. All right. So when it comes to support, that means the price is going to come down, right? And just like a floor, that price point may support the price. Well, that support can also is where you'll find your buyer zone. That's what this is: leg in, base, leg out. I'll just use a smaller line to highlight that, but okay. So we use supply zones or demand zones. Those terms are interchangeable, but as long as you know that demand zone is usually where the buyers are, because the buyers are demanding the supply. There's a demand for the supply. So that phrase goes there. Like, we're demanding that there's a supply. We want the supply. We want to buy it up. And so you'll see that here is another buyer zone. And we were just talking about support, those swing points, etc. So the terminology is many times interchangeable, but it's similar in what. Yeah, no problem, Johnny. So it's similar in what it's intended. What happens is different communities, use different terminologies for it. But if I was looking at this chart and somebody said, where's the demand zone? I would know that they were talking about here. If they say, well, where is the support? I would know that they were talking about here. Because I would always be thinking about the floor. Where did it bounce? Where did it bounce in terms of support? Where did it support the price? That's how I started remembering it. And then up here for resistance, it's like, well, where did it bounce off the ceiling? Here's how I memorized that. Where did it bounce off the ceiling? So here's where I will be marking it. So leg in, 2 in the base, leg out. This is the seller zone because this is where the supply is up here. All right, does that make sense, Lakia? So those terms are in it. Those terms can be interchangeable, and they are used interchangeably. But as long as we know specifically what they're saying, and again, you can mark these same points. This is where price turned around up here. As an example, this would be in the area where price turned around here anyway, because it came down and based and then kept moving. So either turn around or change. There should be some kind of change, but that's what. So yeah. So I guess the short answer is no. You don't have to relearn anything. It's the equivalent of when let's say a football player, when they're with one team, but they go to another team, and it's like the same. The moves are the same, but the terminology is what they got to get used to. That's essentially what ends up happening. Because I started finding out all these other terms that meant the same things that I already knew, which was kind of good because I wasn't technically relearning anything, but that's what that is. So, all right, no problem. All right, y'all, let's take a look over here at SPX and see what we got going on before we head on out. 15-minute SPX. So it looks like right here, it did try to mosey on down and get past the breakout. Did not work. But what I'm seeing here is, we're later in the day. Well, not later, quote unquote, but we're hour past open. And so the sellers kicked it down here and the buyers are pushing it up here without any major news coming up for us. This is the investing.com that we looked at earlier. So that makes me wonder if this is going to end up being more of like an iron condor type situation. There may not be any major shifts in either direction. So we'll bounce out on this information. This is investing.com. And as you remember, they have more of the economic data than the Forex Factory did. So we had some neutral stuff right here for the employment wages quarter over quarter. There was actually no forecast, but the previous it's the same as it previously was. Red Book year over year, also neutral. House price index year over year for February, according to this, neutral. But again, it's showing what previously was 6.5%. And you'll see that a lot of times on this site where this number may be higher or lower than the previous forecast if there's no forecast there, or shall I say previous actual number. But usually if it's not anything that should negatively impact the economy, you'll see it and it'll just have it black for neutral. But this one up here was 1.2%, which was good. That's the housing price index. Sometimes you might see it as HPI, month over month for February. This is the HPI composite, 20 SA month over month for February. Better than forecast and better than previously reported. So we got some good stuff in here. The Chicago PMI was the only one. Well, two. There's two Chicago related things, but Chicago PMI for April was lower than forecast, and the CB consumer confidence was 97, which is lower than what was forecast and lower than what was previously reported. So these are our most recent numbers, mostly neutral and some green in terms of what was reported. So we got, let me refresh this. Looks like the VIX is, the VIX is still up. It is up 0.48%. It is at 14.74. Dow Jones currently is down 0.41%. S&P down 0.24%. NASDAQ down 0.26%. And Russell 2K down the most at 0.79%. Stocks fall on disappointing earnings and inflation data before the Fed decision. Okay. Thank you all so much for hanging out with us for today. I don't see any more tickers, so we're going to roll out on that. Feel free to, if you got anything out of today's stream, please give us the like, the thumbs up. That'll be awesome of you. Also, consider subscribing, and as well as joining our community. Educatedthetrader.com is the number. It is in our description, and you can always come back and take a look at our information if you have any questions. All right. So thank y'all very much, and we will see y'all tomorrow morning. Have a good one.